The Equal Credit Opportunity Act protects borrowers applying for home loans from discriminatory lending practices. This federal law is a crucial part of your real estate exam. It plays a significant role in promoting fair housing and, of course, fighting discrimination. Hello, everybody. It's Zach here from RealEstateLicenseWizard.com. Today, we're talking about the Equal Credit Opportunity Act. Let's get started. So the Equal Credit Opportunity Act, or the ECOA, prohibits discrimination against borrowers applying for home loans. Per the ECOA, lending institutions cannot treat protected classes differently than anyone else. What are these protected classes, or what are the protected classes under the ECOA? Well, we have race, color, religion, national origin, sex, age, receipt of income, and the applicant's exercise of any right under the Credit Consumer Protection Act. What is the Consumer Credit Protection Act? Well, the Consumer Credit Protection Act protects consumers from abusive lending practices. This act encompasses the Equal Credit Opportunity Act, or Title VII. What housing loans does this cover? Well, under the Consumer Credit Protection Act, the ECOA covers mortgage loans, home improvement loans, and home equity loans. Let's talk about why the Equal Credit Opportunity Act was placed in the first place. Women were regularly facing discrimination from mortgage lenders before the ECOA. These lenders often refused to consider a married woman's income when giving out loans. They also denied credit loans to single women more often than other applicants. The Equal Credit Opportunity Act was created to prohibit this type of discrimination based on sex and marital status. However, it wasn't very long after that Congress amended the act to include the other protected classes that we talked about before. So what are examples of Equal Credit Opportunity Act violations? I'll put them on the screen. Inquiring about a borrower's marital status, denying loans to borrowers because of their religion, charging higher interest rates to minorities, denying credit opportunities to qualified women, offering predatory loans to elderly persons, or redlining, which we've talked about, and a few other ones. So how does the Equal Credit Opportunity Act work in real estate? Well, this act ensures that banks, mortgage companies, and credit unions do not take advantage of potential home buyers. Let's see an example of how the Equal Credit Opportunity Act operates in real-life applications. So there was a court case called the Texas Department of Housing and Community Affairs versus Inclusive Communities Project Incorporated. In this court case, Inclusive Communities Project, or ICP for short, sued the Texas Department of Housing and Community Affairs. The ICP alleged that the department was using discriminatory practices when approving tax credits. They claimed that the department was approving credits based on race, which segregated neighborhoods and violated the Fair Housing Act. The Supreme Court sided with the ICP because the department's actions caused disproportionate harm to minority communities. The court extended this reasoning to apply for the entire mortgage industry, which is where the ECOA comes into play. For example, mortgage companies that give out loans to, let's say, more white people than black people, that would be considered violating fair lending laws. So who enforces the Equal Credit Opportunity Act? Well, the Consumer Financial Protection Bureau, or the CFPB, along with other federal agencies, enforce the Equal Credit Opportunity Act. If borrowers feel a creditor has discriminated against them, they can file a complaint with the Department of Housing and Urban Development, or HUD. Borrowers also have the option to file their own lawsuits. And there's also a few other federal agencies designed to support fair lending, and I'll put them on the screen real fast for you. Obviously, the FTC, the FDIC, and more. So what are the penalties for violating the ECOA? Well, there's going to be 3 levels of damages potentially. So 1, actual damages, 2, punitive damages, which could be up to $10,000 for individual lawsuits, and then $500,000 or 1% of their net worth for class action lawsuits. So really there's 3 levels to verifying the potential violation or the potential penalty for the violation. So what does the ECOA not cover? Well, it does not cover the following loan types: subordinate loans, second liens, loans secured by land instead of dwellings. So what factors can lenders consider when it comes to figuring out if they should approve or not approve these loan types? Well, the ECOA does not cover loan applicants who get denied credit for the following reasons: maybe poor credit history, insufficient income, lack of collateral, maybe the loan amount is too high, or maybe the applicant's property is just in poor condition. That is perfectly okay. These mortgage providers can look at that, and if one of those boxes are checked, then they are allowed to deny a loan. So what do you need to know for the real estate exam? Well, the Equal Credit Opportunity Act protects home buyers against discrimination from lending companies. This act asserts that mortgage companies must treat protected classes equally when giving out loans. Because the ECOA is so vital for promoting fair housing, it's an important part of the real estate exam, and you must be familiar with it. For more videos on fair housing and real estate, click here and click here to subscribe. Thank you guys so much for watching. Until next time, see ya. Bye-bye.